Asia shares make the most of Fed messaging. Greenback slips on yen. Sydney Asian shares made guarded profits on Thursday as buyers scented a possible slowdown in the pace of U.S. fee hikes, comforting bond markets and sending the dollar to a three-week low on the yen. The U.S. Federal Reserve amazed no person with the aid of lifting fees 75 basis points (BPS) to 2.252% on Wednesday, however did alter its declaration to cite a few softening in current facts. Fed Chair Jerome Powell sounded definitely hawkish on curtailing inflation in his information conference, but additionally dropped steering on the scale of the subsequent price upward push and referred to that, sooner or later, it would be appropriate to gradual down. The Fed now not feel behind the curve and may now investigate the appropriateness of coverage assembly with the aid of assembly, stated Elliot Clark, a senior economist at Westpac. This is not to say that the Radhike cycle is complete or even that a pause is coming, however risks appearance as even though they may be transitioning from being skewed to the upside to the drawback. The futures market still has 100 bps of in addition tightening priced in through year-end, but also implies round 50 bits per second of fee cuts over 2023. Just the hint of a less aggressive Fed become enough to send MSCI's broadest index of Asia-Pacific shares outdoor Japan up 0.7%. Japan's Nikkei added 0.3% and South Korea 0.7%. Chinese blue chips firmed 0.6%, aided by using reviews Beijing changed into planning greater support for a hard-hit assets quarter. EUROSTOXX 50 futures additionally gained 0.6% and FTSE futures 0.2%. Yet shares of several primary U.S. tech companies, consisting of Meta Platforms, slid after hours as poor quarterly results and outlooks underscored recession fears. That noticed Nasdaq futures dip 0.4%, having enjoyed their biggest day-by-day gain when you consider that April 2020 on Wednesday, even as S&P 500 futures eased 0.2%. Attention now switches to facts on U.S. gross home product for the second one region wherein any other bad reading would meet the technical definition of a recession, although the USA has its own technique of finding out the ones. Median forecasts are for growth of 0.5%, however the closely watched Atlanta Fed estimate of GDP is for a fall of 1.2%. Euro still lacks energy in bond markets. 2-year Treasury yields steadied at 3.00% after falling 6 bits per second in the wake of the Fed assembly. U.S. Although the yield curve steepened barely, most of it remained inverted in a sign investors believe policy tightening will lead to a financial downturn and decrease inflation. While imperative banks are still on course to keep tightening this year, it is increasingly more probable that the most rapid tempo of price hikes can be at the back of us, mentioned analysts at J.P. Morgan, NYSE, JPM, in a Be Aware. Falling commodity fees, extensively excluding European natural gas, ought to offer some inflation comfort, and the worldwide economy out of doors of China is dropping momentum. In currencies, the dollar index eased a fraction to 106.320 after dropping 0.7% overnight as risk sentiment advanced. It also suffered a rare setback at the Japanese yen, falling 0.7% to 135.54 as some traders determined to e-book income on a number of lengthy positions. FRX. The euro hovered around $1.0204, having bounced 0.9% in a single day, however faces stiff resistance at $1.0278. The single foreign money still has an power disaster to deal with because the IMF warned that an entire cutoff of Russian gas to Europe through year-end may additionally cause truly zero monetary boom subsequent year. Russia has brought much less gas to Europe this week and warned of further cuts to return, boosting costs for gas and oil globally. A drop in crude inventories and a rebound in fuel demand within the United States also supported fees. OR, U.S. crude rose some other 92 cents to $98.18 a barrel, having bounced 2.4% overnight, even as Brent received 75 cents to $107.37. Spot gold changed into 0.2% less assailable at $1,737 an oz, having benefited from the dip within the dollar and bond yields. GOL.